Hey guys, Joel Franklin, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets. I'm going to be giving you a quick update and looking at what's going to be happening in the week ahead. So the main story that everyone's talking about at the start of the week is the latest Fed commentary that we had. So we had one of the Fed's governors. He's on the board of governors at the Fed, so he's one of the more important ones. Christopher Waller over the weekend, pretty much coming out and pushing back against the big move we saw in markets last week in response to that softer than expected US inflation data. He was pretty much saying that he thinks markets might have overdone it because, just to recap, look at this it was about a 5.5, slightly more percent rally in the S&P 500 in response to that data. So, that's actually a historic move in the markets in terms of like the day over day gain. And he was talking about the fact that markets shouldn't be so focused on the pace of individual rate increases per meeting. They should be more focused on the end point of where rates go. And then he was saying the usual stuff like the Fed's still got a long way to go in terms of raising interest rates, which it does. Like interest rates are still at just below that 4% area, and markets are expecting them to go up around another 1% from their current levels. But the end result is it doesn't seem to be weighing, this hawkish commentary doesn't seem to be weighing too much on US stocks. Like you can see here, the S&P 500 is only slightly lower, still trading close to that 4,000 area. US yield saw a bit of a rally, and that's helping the Dixie post a slight recovery. We're up a little bit over 0.5%. You got things like euro dollar coming a little bit lower, cable falling a little bit, dollar yen jumping a little bit. Actually, pretty decent rally in dollar yen there, 1.3%. But as you can see from all those charts that I just pulled up, we're still nowhere near retracing that big move that we saw last week. So there's still obviously a lot of hopes remaining in this market that the direction of US inflation is going to be decisively lower from here on out, and that is going to help sort of prevent the Fed from having to get any more hawkish than it already is. So these hopes are definitely lingering despite that pushback from Fed's Christopher Waller. In terms of what we got coming up this week, then let's have a look at the calendar here. Start off with the US. It's not really the biggest data week out of the US, to be honest. We've got PPI, which people are hoping might add to that story of inflation falling. Although look at this, we're still actually expecting the month-over-month rate of headline PPI to rise and the month-over-month rate of core PPI to rise as well from the last month. But PPI is not the most important. We're more interested in CPI, core PCE. These are the things that the Fed is monitoring more closely. And then we've got a couple of regional manufacturing reports, which are going to give us an update as to the health of the US economy in November. Got the New York one, Empire State. Then later in the week on Thursday, you got the Philly Fed one. And then there's going to be Fed speak throughout the week, and we're probably going to see, and retail sales on Wednesday, actually. Yeah, how did I miss that? Retail sales data for October will give us an insight into the ongoing strength of the US consumer, which has been okay. Keeping up with inflation has been the sort of theme so far this year. But yeah, aside from that smattering of US data, there's going to be more Fed speak, and I think you can probably expect other Fed members to sort of echo that tone that we had from Waller, trying to cool the market reaction. Because the thing is, if markets start reacting in a euphoric way and stocks start really, really gunning it back to all-time highs, that actually results in an easing of financial conditions, which actually makes it more difficult for the Fed to hit its inflation goal. Because, if there's a big wealth effect, stocks going higher, that's actually a boost to the economy. And if you've got interest rates coming lower on expectations of an easier Fed, then that's also a boost to the economy as well. So they're trying to manage this situation here. So that's going to be the sort of the theme in the US this week. Regarding the rest of the G10 currencies, it's quite a busy one. So for example, the UK, you've got jobs data on Tuesday, then you've got UK CPI data on Wednesday. Then you got UK retail sales data on Friday. All of these things could affect the pound because we've got this deteriorating economic outlook in the UK at the same time as inflation remains very high, and you got a Bank of England that's sort of caught in the middle. And then another big thing out in the UK as well is this autumn forecast statement, pretty much the government putting out its fiscal plan, which in wake of all the turmoil that we had with the previous Liz Truss regime, her new economic plan, and then her leaving as Prime Minister when that caused a crisis, and now you've got Rishi Sunak, and we want to know what his fiscal plan is pretty much. So it's a big week for the pound. In terms of the other G10 currencies, like I was saying, like for the Aussie, you got RBA monetary policy meeting minutes coming out on Tuesday. Then you got wage price index on Wednesday. I mean, I know it says it's on Tuesday, but like for their time zone, it's Wednesday. Then you got Aussie jobs data. So quite a lot of important inputs for the RBA tightening story and the Australia economic story. So people will be watching that. And then what else have we got in terms of the rest of the G10? Canadian CPI data on Wednesday. And then, yeah, that's pretty much it, to be honest. So, yeah, quite a busy week if you're more G10 FX focused. If you're more macro focused, the story is the Fed, how they react to the recent inflation data. And another thing worth monitoring is this ongoing situation in crypto. Like you've got, let me just quickly show you guys, Bitcoin, which has not been able to participate at all in the rally that we saw in other risk assets like the S&P 500 because of this ongoing situation with the collapse of FTX and questions. It's obviously people are raising questions about the entire crypto industry now. So it's been a big damage for confidence in crypto, even though, I mean, anybody that actually understands how crypto works should understand the fact that there's a difference between centralized exchanges, which are pretty much no different to normal financial institutions, very, very centralized, opaque. No one really knows what's going on their balance sheets necessarily, which was certainly the case with FTX. And then Bitcoin, which is a completely different sort of revolutionary financial technology with this decentralized network of computers which are running this blockchain, which can't be controlled by any one entity. And, they're completely separate things, but people don't understand crypto and they tend to lump everything together, which is why you're seeing Bitcoin continue to struggle. But anyway, guys, that's what's going on at the start of the week, and that's what we got coming up this week. Hope you enjoyed the video. Hope you all found it informative, and I will see you all in the next one.